Hey everybody, it's Sunday, November 10th, 2019, taking a look at the S&P 500 as we get ready to trade November week 3 and monthly OPX. There is a blog article that explains all about monthly OPX and the special way that S&P 500 options trade and expire that particular week of each month. So if you're new to trading S&P 500 options, that's an article you definitely want to make sure that you've read. As boring as the subject matter might seem by the title, please read it so that you understand why there are two Friday expirations on week 3 each month. Anyway, back to the chart. Here is our simplified daily chart, which usually has no price levels on it, just the purple bars that represent the gaps that we've left in our wake, and in an effort to look at those gaps and just look at the simple moving averages. Because if and when we finally do start to sell off, that's really the most important information you've got in front of you, is filling these gaps and whether we catch and hold at the simple moving averages, bounce off of them, or to look below them and reverse back up, and their relationship to where the gaps are at. And right now, as you can see, we're pretty well stretched out with the simple moving averages. And so this is usually the time that we do get close to a pullback. I was particularly concerned about the distance between where we're at now from the 50-day simple moving average. But I did a little research and I saw that the most stretched out we were was in January of 2018 when we made that high. And that was an all-time high that stood for about 7 months. We were 6.5% above the 50-day at that point in time. And right now, to be 6.5% above the 50-day, we'd have to be about 100 points higher on the S&P from where we're at right now. So it would have to be over the course of the next 2 days. We'd have to blast 100 points higher in order to be that far above the 50-day. So I don't think we're overly extended as far as that goes, but we're getting close. Anyway, what I do think is going to really be an effective tool to use this week is our calendar. Monday is Veterans Day. We made an all-time closing high on Friday, not an intraday high, but I do think that this all-time closing high, and it spanned across all the indices with the exception of the Russell. And you know, Asia's going to pick up on that, and Europe's going to pick up on that. And since on Monday it's Veterans Day, that's a bank holiday. There's no government data. So there might even be limited trading on the bond market. I don't know. I don't remember what the bond. But in any case, it's kind of a quiet day where we're higher for making an exaggerated move up. So maybe what we're going to be looking at is a move up above 3,100 and stick the landing on that on a closing basis starting on Monday. And then that will be our benchmark that we will use for support from there on out, and seeing if we can continue and follow through on Tuesday, 100. Tuesday, we have that Trump speech from the New York Economic Club, or the Economic Club of New York, whatever it's called. And the subject of the speech is trade and economic policy. He's going to come into this speech and play hard ass about the phase 1 trade deal. Market's not going to like it. The market's going to take a pullback. We'll break our 3,100 to the downside and begin selling off. If he's positive about it, if he says, you know, that we are very close to making a big deal, and that we're going to be rolling back tariffs because China really wants to make a deal, the market's going to rally, and that's going to push us further up and into our upside targets. On Wednesday, we have the public hearings beginning on the impeachment inquiry, but we also have Powell doing his Humphrey Hawkins testimony before the Senate and Congress. So that's going on Wednesday and Thursday in conjunction with this impeachment thing. So maybe one is going to cancel out the other. The big thing overnight from Wednesday into Thursday, we have some important China data that's coming out. And when I take a look at that, here it's this. We've got obviously some sort of banking policy speech. And then, but the important thing here is we've got industrial production and retail sales for China. That's going to be, you know, if they beat these numbers, that's the kind of thing where you see like futures pop overnight. And maybe if there's something positive in Trump's speech from Tuesday, that's going to, you know, color this more positively, or be more forgiving to this data if it doesn't quite beat as much as the market wants it to. So, and then of course on Thursday of this coming week, we have monthly OpEx, where our monthly options on S&P only trade through Thursday's close. The week after this is pretty much a blank slate. I'm sure there's plenty of economic data or whatever, but to me, if we're going to keep on rallying, we would rally on through this week and then pull back next week, because the week after that, we're already getting to Thanksgiving and Black Friday. So a lot of people will be off. It'll be a lot of thin volume trading and so on and so forth. So if we're going to have a sell-off, it really seems like, maybe starting Friday and into next week, the week after this one that we're about to trade, that would be the time to do it, because people are going to want cover by the end of that week, and because they're going to be away from their desks, and they you don't want to go home short in front of a holiday. So that's my take on the calendar and so forth. I've added a couple of new upside target levels to the targets list. Here is let me pull up a different one. Here we go. We've already gotten through all of these targets. The next one on our list is the 3104. I just had the list up through 3141, but this weekend I added on 3201 and 3234, and I put them on this chart. And the way that we would get to 3200 to 3234 would be times 2 up the Q4 low to that 3028 July high. So times 2 up from this October low here to the takeout of the July all-time high. So times 2 on up is what would get us to 3200, and then getting us up to 3234 would be times 2 up the entire range that we made on Q3. So from the July high to the sell-off to the August low, this whole range, if we took it and we doubled it up, that's what would get us up to 3234. Obviously, once we drift up to around 3140 or so, there would probably be a lot. It would take a lot. There'd be a lot of effort to get through this black space here from 3140 to 3200. Just as it was a tough battle to get from here 3040 on the S&P up through where we're at now to 3100. So there was a lot of back and forth here. So I really don't have a lot of ways to dissect up this space. So I do think that this really shows us a point where maybe we top out here at 3140 or something like that, pull back the November week 4, and then come in the week of Thanksgiving and going into the first week of December on that mission to get us up here to the 3200s on the S&P. If we start to pull back, obviously the gaps and the simple moving averages are our target. I don't think I really need to say much. I think that I see this as a very cut and dry, easy thing to follow. If we get above 3100 and hold that on a closing basis, there is your line of support. When we break 3100 on a closing basis, then you look at your chart, you see where we are in terms of gaps and where the simple moving averages are, and you look for the 10-day simple moving average to get tested. And of course, if we close below it, we're obviously going on to the 20-day, the 50-day, the 100-day, and so on. I do think that when we do get into the next pullback, we're going to be aiming for the 20-day overall, because that played a huge role here in our breakout from off of the October low. We had this day, this was a Thursday on the 10th. We closed here above this cluster of the 100-day, the 10-day, and the 50-day. And then we gapped up open and left the biggest of all our gaps here on this gap up to purposefully get us above the 20-day simple moving average. And you can see we sat here sideways, and then we shot up, and we have this leg along the 10-day simple moving average that comes from this spring up here above the 20-day. So if we're going to top out and come back down, I would expect that it's going to be sort of a magnetic pull towards the 20-day simple moving average. And right now, as of Friday's close, we see that the 20-day has risen over the July all-time high. So I'm going to roll this chart sideways a little bit here. You can see here's our 20-day simple moving average. If we were to come down now and just test and hold above that, we would be holding above this July high. And I really think that that's going to be key. No matter where we're at from up here, when we come back and we pull back down, we must hold above this July all-time high level. And really must hold above the 20-day, because once we break that, we start getting into a deeper correction, and we're probably going to end up having to come all the way down here then and fill this big gap that started this whole leg in the first place. Hope that all makes sense, but like I said, I think we're going to probably be drifting up to a new all-time high on Monday, looking for that close above 3,100, and see if we work our way up to maybe as high as 3,140, 3,145 or so during the course of this week, and then begin a pullback the week after this one that we're about to trade. Caveat being that if Trump's speech spooks the market in any way, boom, down we go, and we'll be on our way quickly to try and test and see if we can hold above the 20-day simple moving average. That's it. That's all I got. Have a good rest of your Sunday. Good luck and good trading.